Hello everyone, welcome back to my YouTube channel. In today we are going to learn a very easy and useful inventory valuation method called the simple average price method. Let's see the meaning of simple average price method. Simple average price, it is the average of the prices without any regard to quantities. Means here we will not taken into consideration the quantities. Here we will take only the average of the prices. So the calculation of simple average price involves adding of different prices and dividing by the number of different prices. Clear? Means simple average price, that is equals to total of unit prices divided by number of price lots. Number of price lots and total of unit prices and how many number of price lots. 1, 2, 3, 4, 5 like that. Clear? So simple average price method, it means what? That is used to determine the issue price of materials from inventory. So in this method we take the average of the prices of all available lots without considering the quantity of each lot. So remember, here in this simple average price method we don't consider the quantity while calculating the average, just the price of each lot. Clear? So let's take an example to understand this better. For example, suppose we have the following purchases. We have the following purchases. They are, let's see, 100 units at rupees 10. So I will write down 1 minute. See here. We have the following purchases. First write down the purchases. That is 100 units at rupees 10 and 200 units at rupees 12 and 300 units at rupees 14. Clear? Here to find the issue price using the simple average price method. Now find the issue price using the simple average price method. So here we take the unit price only, prices only, not quantities. Clear? So we take the unit prices. So unit prices are 10, 12, 14. In simple average price method we will take only price, not quantities. Clear? So simple average, that is equals to that is total of unit prices divided by number of price lots. So total of unit prices means, it means what? 10 plus 12 plus 14 divided by number of price lots. How many? 1, 2, 3. Clear? So 3. So now we have to add the unit prices, that is 10 plus 12 plus 14, that is equals to 36 divided by 3. How much? That is equals to rupees 12 per unit. Rupees 12 per unit. So all materials issued will be charged at rupees 12 per unit. Clear? In this way we will calculate the rates under simple average price method. So one important thing to remember is that the simple average price method, it is suitable when material prices don't fluctuate too much. Then only we will use the simple average price method. Then only it is useful or suitable. So also it is not as accurate as other methods. The simple average price method, that is not accurate as other methods. Why? Because here we ignore the quantities. We ignore quantities, right? Here we will only consider the prices and we ignore the quantities. So that's why simple average price method, that is not accurate as other methods like a weighted average. Clear? So this is about simple average price method. Clear? So now we will solve one problem under simple average price method. See here, show the store's ledger entries as they would appear when using simple average method of pricing issues. Clear? Using the following data. 2025 Jan 1st opening balance 300 units at the rate of rupees 2, and Jan 2nd purchased 200 at rupees 2.20. 4th issued 150 units. On Jan 6th purchased 200 at rupees 2.30, and 11th issued 150. 19th again they issued 200 units, and 22nd purchased 200 at the rate of rupees 2.40, and 27 again they issued 250 units, and 28th purchased 200 units at the rate of 2.50, and 31st issued 150 units. Clear? Here, and next see, the stock verification records reveals shortages on Jan 10th and Jan 30th to the turn of 10 and 20 units respectively. Means on Jan 10 there is a shortage of 10 units, and on Jan 30th there is a shortage of 20 units. It means what? How we have to consider this one, the receipt or issue? So here shortage means here we have to treat it as inventory losses, and it will be deducted at the prevailing rate. Means here we have to consider these shortages as issues, because here we will treat it as a inventory loss, because there is a shortage means what? It is an inventory loss here, so that we have to consider it as a issue. And next one, there was a refund of surplus from a work order of 25th, 20 units earlier issued on 4th. See here, on 4th issued 150 units, but there was a refund of surplus on 25th of 20 units, that is earlier issued on 4th. It means what? On Jan 25th there is a refund of 20 units. Here how we have to treat this refund means what? Receipt. We have to enter this transaction in a receipt side, because there is a refund of surplus. A refund of surplus from a work order. Clear? And rate I will explain in solving the problem. Clear? Now let's solve the problem. See, here in this simple average method I have taken the here particulars one extra column, okay, so that you can understand the problem clearly. So first write down opening balance on Jan 1st. So write down 2025 Jan 1st opening balance 300 units at the rate of rupees 2. Where will you write? In the balance column. 300 at the rate of rupees 2. It means 300 into 2, that amounts to rupees 600. Clear? Next, on Jan 2nd purchased 200 at the rate of rupees 2.20. So go to the purchase means received. Here write down opening balance. Opening balance. Clear? Now on Jan 2nd purchased. Write down in the particulars column purchased. How much? 200 at the rate of 2.20. So 200 into 2.20 equals to 440. Write down the amount 440. And next what? Next we have to write down go to the balance column. And in FIFO and LIFO, what we have to use to do? Here in the LIFO and FIFO, first we used to write down the oldest stock or oldest balance with us, and next immediately we used to write down the newest one. Right? Separately. Means first 300 into 2 600, and secondly 200 into 2.20 440. In this way we used to write down in the LIFO and FIFO method. But in simple average method, what you have to do is you have to write down the quantity in a combined manner. Means 300, that is the opening balance, and here we received or purchased 200 quantity. right? Means 300 plus 200. We have to write together. That is 300 plus 200 how much? That is equals to 500. And amounts also 600 plus 440. 600 plus 440, that is 1040. 1040. And what about the rate? Here in, remember, in simple average method we will not write down the rates. Only opening balance here we need to write down, but after that we should not write down any rates in simple average method. But in LIFO and FIFO we used to write down the rate also, and we used to write down the clearly separately. We used to write down the balance stock, that is 300 into 2 600, 200 into at the rate of rupees 2.20440. But here we have to write down the quantity together, that is 300 plus 200. So total balance with us, that is 500 quantity of materials, that amounts to rupees 1040. No, don't write down the rates. I hope this is clear to you all. Next, on 4th, what happens? On 4th issued 150 units. On 4th issued 150 units. On 4th, go to the issue column. Write down the quantity 150 at the rate of 2 or 2.20. This is not LIFO and FIFO method, right? So we are following the simple average method. So what we have to do? What I said, we have to take the average. The calculation of simple average price involves adding of different prices and dividing by the number of different prices. So total of unit prices divided by number of price lots. Here we have to take the price of balance or purchases. So write down here Jan 4th simple average equals to 2 plus 2.20. 2 plus 2.20. In order to find out the issue price divided by how many lots? 1 and 2. So write down 2. 2 plus 2.20. How much? 2 plus 2.20. That is equals to 4.2 divided by 2 means 2.10 rupees. 2.10. This is our issue price on Jan 4th. So write down 2.10. In this way we have to find out the issue price. 150 into 2.10. How much? 315. 315. Now go to the balance column. Out of 500 we issued 150 units. Now remaining units, that is 350. Don't write down the rates, and here also you need to deduct 1040 minus 315. That is the issue cost, that is equals to 725. Clear till here? I hope this is clear to you all. Next one, after Jan 4th, here Jan 10. So Jan 6th, purchased 200 units at the rate of 2.30. 2.30. So 6th one, on Jan 6th, here issued, write down in the particulars column, and Jan 4th, here purchased. So 200 units at the rate of 2.30 means 200 into 2.30, 460. 460. Clear? Now go to the balance column and write down the total quantity available with us, that is 350, and on Jan 4th we have 350. On Jan 6th we again purchased 200 units, right? Means together it's 315 plus 200. How much? 500 and, sorry, not 315. This is the issue price, right? Here 350. Balance is 350. 350 50, that is on Jan 4th, and on Jan 6th we purchased 200 quantity, right? Plus 200, that is equals to 550 units. Don't write down the rate here. Again 725 amount, and here we purchase, so add 460 plus 460, that is 1185. 1185. Clear? Next transaction on Jan 11, but before that there is one transaction is there. See here, the stock verification record reveals shortage on Jan 10th of 10 units. On Jan 10, 10 units, and Jan 30th 20 units. We will see it later. First we have to enter this transaction. On Jan 10 there is a shortage of 10 units. So write down 10 shortage. How we will consider this shortage? So here these are treated as inventory losses, and it will be deducted at the prevailing date. Means we have to deduct, or we have to consider it as a issue. Shortage we will consider it as a issue. So go to the issue column and write down 10 units. 10 units. And issue price. How we will calculate the issue price? So write down on Jan 10th. Jan 10th, simple average equals to, now this is our balance of stock, that rate to 2.20, and here one more purchase on Jan 6, 2.30. Here we will not take into account issue price. Remember this one, we are finding out the issue price. So we will not consider the issue price again. Clear? So 2.20, 2.30. So write down 2 plus 2.20 plus 2.30. How many lots? 1, 2, 3. Equals to, so 2 plus 2.20 plus 2.30. So 6.5 divided by 3 equals to 2.167. Means you take rupees 2.17 up to 2 digits. Clear? 2.17. So write down 2.17, that is our issue price for shortage of 10 units. So 10 into 2.17. Sorry. Equals to 21.7. 21.7. Clear? Now we issued 10 units, means 550 minus 10. How much balance remaining with us? 5 units, 540. Now here also 1085 minus 21.7. 1163.3. 1163.3. You can take it as a 30 also. Okay. So next one. After 10, go to the 11th. On Jan 11, issued 150 units. Issued 150 units. So on Jan 11th, issue 150 units. Issue price. Now again we need to calculate. So, but here there is no purchase. After 10th, there is no purchase. Right? Means the issue price on Jan 11th is 2.17 only. Here the same simple average, 2 plus 2.20 plus 2.30 divided by 3. Here in between, after Jan 6, there is no any purchase. There is no any purchase. So here same rate we have to write down. So write down on Jan 11, that is rupees 2.17. Clear? 2.17. 150 into 2.17 equals to 325.5. Now out of 540 we issued 150 units. Means remaining units with us 390. 1163.3 minus 325.5. 325.5 equals to 837.8. Clear? 837.8. Clear? Now next on 11th issued, right? Don't forget to write down the particulars column. So Jan 11, next on Jan 19th again issued 200 units. 19th issued 200 units. There is no any purchases in between, so apply the same rate, that is 2.17. 200 into 2.17, how much? 434. 34. Now out of 390 we issued 200 units, so remaining units 190. 837.8 minus 434 equals to 403.8. 403.8. Clear? Now after that 19th, 22nd purchase 200 units at the rate of rupees 2.40. So on 22nd purchased 200 units at the rate of 2.40, means 200 into 2.40, how much? 480. Means there is an increase in the stock balance, means 190 plus 200, because we purchased, right? So 390 and 403.8 plus 480, 883.8. or 80. Next one after 22nd, 27, but here there is 25th, here January 30th, so 25th there is a refund. So see, listen it very carefully. There was a refund of surplus from a work order of 25th 20 units earlier issued on 4th. So write down 25th surplus. Surplus means we have to consider it as a receipt. We are receiving from the earlier issued on January 4th. Here earlier we issued 150 units. In this we received surplus of 20 units. Write down here 20 units. At the rate of which rate we need to write down here? See, on Jan 25th you had a refund of 20 units. 20 units at the rate of rupees 2.10 from the Jan 4th issue, because in the problem they clearly specified there was a refund of surplus from a work order of 25th 20 units earlier issued on 4th, means earlier issued on 4th we apply 2.10 rate. So here also we need to apply 2.10 rate. Clear? So write down 2.10. So 20 into 2.10, how much? That is equals to rupees 42. Clear? Now 390 plus 20. Balance in the balance column 410 and 883.8 plus 42. 925.80. Clear? Next after 25th, 27th issued 250 units. 27th issued how many units? 250. Now what is the issue price? Here whether we have to consider it this 2.10. On 22nd, now here we have to consider 22nd purchase, that is 2.40, but what about 2.10? See here, since rupees 2.10, it was already part of the earlier average, that is 2.10, right? That is Jan 4th issue. So no new rates was added to the calculation. So we should not consider it 2.10. Suppose in the example they have not mentioned earlier issued on 4th, then we have to consider this 2.10. But here this clearly specified that refund date is out of the issue on 4th. So we should not consider rupees 2.10 because that was already part of the earlier average. See here, earlier average, that is rupees 2.10. So for this 27th issue, now we have to calculate the simple average rate. Simple average equals to 2 plus 2.20 plus 2.30 plus this is the new purchase on 22nd, 2.40 divided by 1, 2, 3, 4. Write down here 4 equals to 2 plus 2.20 plus 2.30 plus 2.40 divided by 4 equals to 2.25. 2.225 means we will take it as a 2.23. Okay, 2.23 rupees 2.23. Clear? Rupees 2.23. So we will issue the 250 units at the rate of rupees 2.23. So write down, so calculate 250 into 2.23 equals to 557.5. Okay, now there is a decrease in our stock because we issued, right, 410 minus 250, 160, and 925.8 minus 557.5 equals to 368.3. Clear? Now after 27th, 28th purchased 200 units at the rate of 2.50. 28th purchased 200 units at the rate of 2.50. 200 into 2.50, that is equals to rupees 500. Means there is an increase in our stock. 160 plus 200 equals to 360. And 368.3 plus 500 equals to 868.3. Clear? Now next, but see, after Jan 20th there is a shortage again. Jan 30th shortage of 20 units means shortage. That one we need to consider it as a, it is a inventory loss, so we have to consider it as a issue. Clear? On Jan 30th shortage, write down in the issue column, that is how many units? 20 units. 20 units at the rate of, now we have to calculate the rate. On Jan 30th, simple average equals to 2 plus 2.20 plus 2.30 plus 2.40 plus 2.10, that is surplus. It was already part of the earlier average, so don't consider it. After that there is a purchase on 20th, that is 2.50. 2.50 divided by 1, 2, 3, 4, 5. Write down here 5. So equals to 2 plus 2.20 plus 2.30 plus 2.40 plus 2.50 divided by 5 equals to 2.28. So rupees 2.28. Okay, so 20 units at the rate of 2.28. 2.28. So 20 into 2.28. How much? 45.6. 45.6. So there is a decrease in the balance, minus 20, 340, 868.3 minus 45.6 equals to 822.7. Clear? Now next one on Jan 31st, there is a issue of 150 units. This is our last transaction. On Jan 31st, issued how many units? 150 units. And there is no purchase in between. After Jan 28, there is no purchase. Means the same rate will be applicable. That is rupees 2.28. 150 into 2.28, that is equals to 342. Now there is a decrease in our balance. 340 minus 150 equals to 190. 822.7 minus 342, that is equals to 480.7. 1 minute. Yes. Minus 342. 480.7. Clear? So, our closing stock 190 units equals to 480.7 rupees. Clear? So I hope this problem is clear to you all. If you have any doubts, please leave a comment and be very careful while calculating the issue price. Okay, if there is, but be very careful in surplus adjustment. Okay, if in the problem if they mention that is already part of earlier issues, then don't consider it while calculating the issue price. If they have not given any information, means they have they are not part of the earlier issue, then you have to consider that price while calculating the issue price. Clear? So if you have any doubts, please leave a comment. And if anyone wants the solution of this problem, please comment and I will upload in my Telegram channel and I will provide the link in the description box. Thank you.